Today we got the Jackson Hole Symposium and we heard from Powell and the markets are cheering. The Nasdaq's up 1.7%, S&P 500 is up 1.6%, and the Dow Jones is up just shy of 2% on the day. And look no further than the Russell if you want to talk about hype. This is almost up 4% on the day. Meanwhile, the dollar index is plummeting lower here as expectations for rate cuts are back on the menu. When looking at the 17th of September meeting, we are now back expecting 89% chance that we are going to get an interest rate cut. And looking out to December, the last meeting of the year, we are actually seeing the market back to expecting 2 to 3 rate cuts this year, which people were wobbly about whether or not that was going to happen. And now we've got back to 2 to 3 rate cuts. So the dollar is plummeting lower. Gold is on the rise. Look at silver up 2%. Bitcoin's up 3%. And Ethereum might be the winner of the day, up 9.4%. Take a look at yields, which are falling off as, like I said, expectations for rate cuts are back in view for market participants. Powell indicates conditions may warrant interest rate cuts as the Fed proceeds carefully. This is pretty much as close as you're going to get to a September rate cut signal from the chairman. Jerome Powell on Friday gave a tepid indication of possible interest rate cuts ahead as he noted a high level uncertainty in what is making the job difficult for monetary policymakers. With policy in restrictive territory, which if you've been watching the videos, you know I've been talking about this quite a bit. He keeps calling it restrictive, which signals that he thinks there is room to wiggle lower in interest rates if necessary, but that there is also restrictive for a reason. He also points out there's problems with inflation too. So there's kind of this rock and a hard place, but it does seem that we likely are going to get some cuts this year. The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. While not addressing the White House demands for rate cuts specifically, Powell did note the importance of Fed independence. However, there were some claims and some expectations that people thought he was going to make a huge stance on this. But again, Jerome Powell has been a relatively predictable guy when it comes to, he's a pretty stable guy. And overall, this wasn't really a huge probability that was going to happen. There were some claims that he was going to be, taking it to the mic on Donald Trump's demands. But it does seem like, again, we've been talking about this on the channel quite a bit. You have evidence of cooling labor statistics and signs of sticky inflation. What does the Fed do? Well, we can see cooling data on the jobs front. Take a look at the NFP report over time showing signs of slowing in the hiring world. JOLTS job openings continuing to trend lower here, but at the same time, some stubbornness in the inflation report bouncing back just before it got down to that 2% target rate. And the producer price index definitely showing some concerns around inflation peaking back up again. But interest rates are still at 4.5%. And with labor data showing signs of cooling and a 2.7% reading in CPI, we've been talking about this on the channel, and I'm glad to see that it is coming true. It is likely the case that we're going to get some rate cuts. Are we going to get the White House's 1.5% demands for rate cuts? Very unlikely. But some rate cuts to appease the labor market and to keep things relatively cooled off before the jobs market data starts to come in real bad, I think this is the right call, and I'm glad to see this. Powell signals likely September interest rate cut, citing downside risks to jobs. Here's an updated look at the Edgefinder's top setups page as we go into today. Gold and silver still getting their bullish readings from the last few weeks. Euro dollar also joining the list again as a bullish setup here today. And dollar yen, dollar Swiss, very bearish readings are definitely paying out big today. Dollar yen dropping 1.15%, or in pip format for the Forex guys, that's 195 pips lower. Big move. Euro dollar's up 1% here today, or in pip format, that is 128 pips. And the dollar index itself is down almost 1%. I'm very curious to see what happens next with the dollar. If we can start to break support levels, we've been kind of in this grindy upward trend. Let's see what happens here at support around the 97.80 level. I do lean a little bit more on the bearish side of the dollar. As indicated by the Edgefinder's bearish readings going into today, I'm going to generally stay with the Edgefinder's consensus here. Metals against the dollar look bullish. Euro against the dollar looks good. dollar pairs against counter currencies just generally look a little bit weak at this time. So what do we do here? With the stock market jumping, is today the day to go out and buy stocks now that we have the Fed chair saying, hey, we're going to get rate cuts? It kind of sounds too good to be true. And in my experience, the better time to buy stocks is when people are scared and panicking and, the market's pulling back a little bit rather than going out and chasing. However, you could still get a little bit of an exhaustion run here to the upside. I do generally still feel not super optimistic around buying stocks at these levels. The Edge Finder is getting a little bit of a cautious tail. It's not getting a bearish reading on stocks. When you look at the top setups page, if we go back to this page really quick and we just take a look at specifically, we'll add in just the indices, you can see the indices are still getting really neutral readings. Economic data suggests some softness in stocks could come in, but technical reads still look really strong. This is where we get a mixed report and why I don't have a huge interest in buying index positions at this time. However, in terms of my own positioning, this is definitely a good day for me. I have several long positions on a lot of the mega tech stuff like Meta, Amazon, Nvidia. Fortinet is looking good today. So I've got a lot of stocks that I've been buying and trading. I've been talking about this a lot on my second YouTube channel where I trade stocks every single day, Trader Nick Stocks, if you want to check it out. It counts up about 1.4%, so it is definitely a good day, but I will actually be taking this opportunity to continue to play defensive, raise cash, and sit on the sidelines. I do have conflicting views when it comes to stocks. Yes, technicals look good, but fundamentals look concerning to me. You're still dealing with inflation and weakening jobs data. And yes, the Fed may cut rates, but I question if it's going to be enough, or maybe the better quick case would be if the reward potential upside is worth the potential risk if things were to go wrong in this process. What happens if in the upcoming NFP report and CPI report, if we get some really devastating data and the stock market sitting at all-time highs? Those are where you get some of the sharper drawdowns in the stock market. So for me personally, I would rather wait for pullbacks and I'd rather miss a little bit of the upside. You can see the stock market's up about 1.54%. I'm up, as you just saw, about 1.4% today. So I am capturing most of the upside, but specifically it's because of my Tesla position. You can see Tesla is up 5% here today, and it is my biggest single owned stock. Really big push to the upside, of course, helping to carry the weight. This has been a trade I've been sitting in some time, and I've actually been trading some options contracts around it. So that is definitely a help. And to be fully clear, let me also follow up on a trade that did not go so well for me today. The VIX trade definitely fell apart here, although it's not a big loss or anything in the account. I'm down 125 bucks in this trade. Still has potential, but this goes out to November 19th. I bought this with the anticipation that if you got something surprisingly negative from Powell today, this could pay out big, but we did not get that at all. And you can see I'm kind of glad that it didn't, because it meant stocks moved higher and the VIX dropped in tandem. So what about gold and silver? Do things look good now for some buys? Well, gold still is in super choppy range-bound environment. If you've been watching my videos, then you know what I'm going to say. I'm looking for breakouts or pullbacks, and there's nothing really here just at these current levels. But silver is another story. This chart looks great. You've got a nice push through these highs, and I actually am looking for possible buying opportunities. If you do come into this previous level here and pull back, I'd actually still be interested in possibly looking for some pullback longs in this general area. I think silver has a lot of upside, and as I've mentioned, when I look at the top setups page, Edgefinder's still getting a really strong score for silver, and I love that we have both technicals and fundamentals lining up. And by the way, if you want to try out a limited version of the Edge Finder, we now have a free demo version available on our website. The first link in the description below will take you to a form you fill out. Just put in your email and we'll send you a copy of the Edge Finder limited free version that is now available. Obviously, we can't give away our full product for free, as this stuff does not build itself for free. It is very expensive software to build and maintain, but we have had a lot of people request for a chance to try out the tool and explore its features. So we've now made a limited version available on our website. So click that first link in the description if you want to try out the Edge Finder and explore all of its features. Taking a look at some institutional positioning, I do find it very interesting that you do still have a lot of institutional money on the bearish side when it comes to indices, which is another reason I'm a little bit cautious on this. Barring the NASDAQ is the only one that you can see actually a majority of long positioning. You do have some short side on the Dow Jones. It's pretty mixed on Dow, but S&P and Russell definitely lean bearish in terms of institutional activity. When we look at some historical readings for institutional money, you can see downward trending in the US dollar, which has been the right call for sure. The dollar's been really bearish bearish this year, so institutions have been playing that trade really well. They've also been buying into gold, which has also been a pretty good trade in the last few months. They've also been buying into gold, which I think is interesting because it's been range bound the last few months. Maybe they're gearing up for a big breakout move in gold in coming months. And when we look at the S&P 500, I find it really interesting that we do seem to see a rise in short interest from institutions. So is there a possibility that you could get some sort of rug pull event in coming weeks or months? Maybe, we'll see. Personally though, I will not be shorting or betting against this market. It's still upward trending, and simple rule for me when it comes to trend stuff, don't fight the trend. Do I think stocks deserve to be at all-time highs? Personally, no. I think there's room for them to pull back, and that's why I'm not buying stuff actively, but respecting price action, I'm still just holding on to a lot of the stocks that seem to be working well for me and trimming my gains to kind of build up cash for a possible pullback that I think is coming. Today's video is sponsored by Black Bull Markets. Black Bull is a New Zealand FMA regulated broker offering Forex, metals, and crypto trading to their users. With access to over 26,000 tradable instruments, everything from gold, commodities, indices, and more, through their CFD platform, you can trade pretty much anything. They're also backed by one of New Zealand's largest investment management firms and provide institutional grade trading conditions. Black Bull Markets has also earned multiple industry awards for their fast execution speed and their leverage trading opportunities on their platforms. Traders can access up to 1 to 500 leverage and choose from several platforms like MT4, MT5, CTrader, and TradingView. And something super cool is that they offer no commission on crypto trading, as well as highly competitive spreads, especially on Ethereum. And for a limited time, active traders can receive free TradingView Premium and up to $60 reimbursed every month just for trading with Black Bull. And if you're interested in copy trading, they have an expansive platform just for that. You can see real trading results from other traders in a live environment through their copy trading platform. And when it comes to choosing a great brokerage, choosing one with competitive trading costs in the form of spreads and commissions is very, very important. With their ECN Prime option, you can see spreads from 0.1 pips, which is pretty crazy. And of course, if you're a larger trader, this institutional package looks incredibly competitive, with spreads from 0 pips as well as a $4 round turn commission. Of course, there is a minimum deposit on this, but all three of these look highly competitive compared to the industry. Make sure to use the link in the description down below. We'll leave all the information you need to start trading with Black Bull and start taking your trading to the next level with their amazing platform, their competitive spreads, as well as their copy trading platform if that's something that you're interested in as well. So like I said, make sure to use the link in the description down below to support my channel and also to check out Black Bull to see if it's a right fit for you. Now back to the video. And on today's episode of the Market Insights podcast, I discussed this in more detail with Johnny Hart. Check out the episode here, and remember that you can find the full episode linked in the description below.
This morning, we heard from the head of the Fed, Jerome Powell, and interesting comments from him at the Jackson Hole symposium. He's certainly given a bit of a rocket boost to expectations that there will be an interest rate cut in September. Of course, that's a move that President Trump has been demanding for months. Speaking to central bankers, he argued that the inflationary impact of the tariffs, of course, Trump's tariffs, could prove temporary. So a fairly dovish speech, I think, from Powell, and I'm sure the markets liked it, and it was also reflected in the currencies as well.
Yeah, there's a lot to unpack with what was expected from Powell's speech today versus what we got. And actually, there were several things. I've got some notes in front of me we can go through that I thought were worth mentioning about what was said by the chairman. First and foremost, I guess people had a lean or a tilt towards expecting Powell to be quite hawkish going into this event. Actually, myself included. I thought that there's a good chance Powell would kind of smack down the possibilities of getting several rate cuts this year, and maybe kind of say he's remaining open-ended to what the data suggests even going into September. Whereas instead, we got a pretty clear indication that the Fed does have their finger on the pulse to the point that they are happy with the idea of potentially cutting interest rates this year, and that they, specifically Powell used the words, believing they are, quote, modestly restrictive, which he issued gives them some room to pay attention to both sides of their dual mandate, right? So he really issued that, yes, there are uncertainties around tariffs, but one of the things that he really harped on today was that he still thinks that, or that his base case, he called it, for trade dynamics and tariff stuff was that it would likely lead to a one-time increase in prices. And while it does pose a challenge to inflation in coming months and years, that their base case being at sort of a short-term burst of inflation and not a sustainable one could be something that they can kind of look past and also administer to the other side of their mandate, which is cooling labor statistics, which have been more and more apparent. We've seen softness in the NFP reports that come out each month, right? The non-farm payrolls have been soft and kind of softening over time. The absolute value of NFP numbers have been dropping over time. JOLTS job openings have been cooling. We've seen evidence that the labor market is showing some signs of softening, and Powell was really attentive to that today in his speech, which I think the market was relieved to hear. Had he come out and kind of given the delivery of inflation round 2 is right around the corner with these trade dynamics, and we don't feel confident enough to cut rates, the market probably would have really had a bit of a panic. But instead, we saw a response here that was very positive in the stock market and currencies. We'll get to that in just a second. S&P 500 up 1.6% at the time of recording. Same thing with the NASDAQ. Dow Jones is up 2%, and the Russell 2000 index, the small cap index in the U.S., up just shy of 4% at one point here today. So really big burst of energy for U.S. stocks and international stocks following as well, up today. But then the big loser here today, of course, was the dollar index, which is now pricing back in. We saw the Fed Watch tool, and just to give kind of everyone a last few weeks summary, the Fed Watch tool, which is a tool that essentially looks at bond yields and tries to make or mathematically puts together a probabilistic standpoint of what the bond market thinks the Fed is going to do in their upcoming, monetary policy interest rate decisions. We went from, in terms of the September meeting, expecting a 99% chance that we would get a rate cut of 25 basis points. That was a few weeks ago. That was kind of the base case. Then we dropped all the way down up to this week to 70% chance. So we saw, hey, there's some room that the Fed may not be cutting in September, and we may continue to wait and see. Well, today went back up to, at least it's jumping around at the time of recording this podcast as markets are still volatile today, but it jumped back up to around 89 to 90% chance. So it does seem that we are on the cusp of getting some rate cuts from the Fed. I do think that, actually there was some commentary by Powell that I thought was worth mentioning, which was administering to both sides of the dual mandate, right? Talking about the interest rates or where inflation is, rather, and also talking about where the jobs data is, kind of administering to both sides and what they do given this circumstance being rising inflation, but also sticky or also some coolness in the jobs data. And that combination, he essentially reiterated the best strategy that the Fed has in that situation is to essentially watch both sides, and whichever one needs more help, that's the one they're going to kind of make a move for. So basically opening up the possibility to administering to the jobs data if it keeps worsening, or administering to inflation if it keeps worsening there. But I do think that in the bigger picture, if you do see continued weakness in the jobs market, the Fed is going to act more aggressively on that, simply because inflation is this thing. It can jump all around, right? Oil prices and supply chain, all those things can really swing inflation, and they can have these sort of short-term uptrends and downtrends. But employment data can be the sticky one. That one can be really tricky. If you get a recession, right? If you get a persistent downtrend in employment data that really catches roots and stays steady, that could be really problematic. And so I think the Fed is really keen on keeping an eye on employment data, and we heard some strong evidence of that from Powell today. Projections for rate cuts by the end of the year, just to look out to December, it looks like the base case is now somewhere between 2 to 3 rate cuts. Maybe we call it 2.5 rate cuts expected by end of year. And finally, if you want some more content, check out this recapture from the live stream here today. I'll leave it linked in the top right hand of the screen on our second YouTube channel, A1 Trading. You can find our conversation between Marco, myself, Kenzo, and myself, just discussing what was happening in the Fed meeting.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.